We want to be a one-stop solution for Nutra, wherein any customer who is looking to get ingredients or get their products made, they would come to us.
Hey everyone, welcome to Sunday Investing. We are back with our Know Your Promoter series. We are talking to Ankit today, who's the promoter for Chemkart, the IPO for which is opening next week. So, without much delay, we'll get into the questions. Just understand Ankit's journey. What does Chemkart do, and why should investor try to evaluate the business in terms of applying to it? So, with that, Rohit, over to you to get started.
Thanks, Manish. Hi, Ankit, and thank you so much for taking the time out. Really excited about this conversation. So maybe the best place to start is just perhaps you can just tell a little bit about yourself, how you came about this business, how you started in this segment, this and this particular company, and what exactly this company does.
Right. So, hello all. Hi, thank you, Manish and Rohit, for this opportunity. And to all the investors, my name is Ankit Mehta. I'm 34 years old, born and brought up in Mumbai. I have done my chemical engineering and master's in marketing. I graduated in 2013 and I come from a family background who is deeply into the industrial chemicals business. My grandfather started the family business, then my father joined, and in 2013 I joined my father's business of industrial chemicals. But the space was very congested that time, and I did not see much opportunity for growth there. So in 2015, I started to venture out myself, and the journey of Chemcart began. So the main concept of Chemcart in 2015 was we built an online B2B platform for laboratory chemicals, industrial solvents, and equipments. But we were way early in 2015 when people were not even thinking of buying clothes online. I had thought to, start an online platform for chemicals. We built everything we launched, but it wasn't successful. So in 2017, we pivoted our direction and entered into the nutraceutical, personal wellness, health supplements, sports nutrition space, which was way booming at that time. People were still not aware, and I saw a huge opportunity to enter this space. So that's how the journey of Chemcart began. With modest investment of 10 lakh rupees back then, we kept on growing year on year. First year, we did 2 crore revenue. Then we did 10 crore, 20 crore, 40 crore, 80 crore, 130 crore, and we reached on our without taking any external investment. Last year, we did a top line of 200 crore with a profit of PAT of 24 crore plus. So that's been a journey for us from like zero to all the way here.
That's fantastic. To get to 200 crore with no external capital, completely bootstrapped in hardly 10 years is actually very, very commendable. Maybe you can tell us a little bit now on what exactly Chemcart does. What was it that you pivoted to when you're talking about nutraceuticals? What is it that you guys do? I understand there is some amount of currently a trading business. So just help our viewers understand what you do and what is the value add that you guys provide.
Sure. So we have our own 30,000 square feet space in Bhiwandi where we process these ingredients. So if you take any product which you're consuming, any supplement, if you see the back label, there'll be a list of ingredients mentioned in there. So out of those ingredients, 8 out of 10 ingredients we are providing to those brands or the manufacturers who are making those products. So we are like a one-stop solution for any company which wants to make their own product into the nutraceutical space. They come to us and we help them develop the product. We guide them which ingredients to use. We sometimes even help them formulate those products. So that is what we do. So it's not a simple trading business. It's not like we are buying from somewhere and selling somewhere. We are completely and deeply involved into the brand, the product development, R&D. So we are there from scratch with the company.
Understood. And where do you source these ingredients from? Is this domestic or is this mostly international?
Most of our ingredients, 90% of our portfolio, we have a product portfolio of more than 120 ingredients. Out of 90% of them are imported. Some are coming from China, Korea, Indonesia, Europe. So we have a wide portfolio of vendors who have a deep tie-up with.
Understood. 2, 3 years ago, when the whole chemical industry had issues with Chinese dumping of products, did that affect this segment also? And in general, is that a risk, with the Nutra ingredient space?
See, China is a very strong player in this industry, even in pharma APIs as well as nutraceuticals. Many of the products are made in China. We are not considering that as a red flag, but we are just developing the industry on top of that. So I'm
Hmm.
not seeing any red flag from there.
Understood. And I guess that's one of the reasons why you want to bring manufacturing
Correct.
into India.
Correct.
Understood. Okay, so let's just change tack a little and talk a bit about your clients. You mentioned this briefly, some of the products that we might use. So who are these clients? Can you tell us the names of some of these? Are these domestic clients, international clients? Just help us understand this.
So 95% of our business comes from domestic market, and we are approved vendor for most of the top brands which are present in the market. So some of our marquee customers are Bright Life Care, GNC, Big Muscles, Health Card. So all these companies and the brands are our customers. And most of the third party manufacturers which produce the product are also our customers, like Backfo, Xeon Life, Tirupati, Nutricore. So most of these are customers.
There was a recent listing. I don't know if you're aware of this company called Influx Health.
Right.
Would they be considered a peer, or would you kind of be supplying to them since they are also a manufacturer?
So Influx is our customer, and I know the
Understood.
product also very well. Yeah.
Okay, understood. So just on the products that you mentioned that you have approvals and so on. So what is the, what are some of those barriers, or what is that approvals that is needed in this segment? I know this is a little different from pharma, but I presume ultimately this is something we consume. So there will be a set of approvals and certain standards that need to be met.
Correct. So mainly FSSAI board is leading this industry. So all the products are approved by FSSAI. Even when we are importing any product, so once the goods reach the port, the FSSAI goes to the consignment where it is. They remove the sample, they take it into the labs. Then the lab takes 4 to 5 days for testing. Once the approval comes, then only the goods are cleared into India. So this market is very regulated and very organized.
So is there a challenge, for example, for you to get approvals for your finished goods that you ultimately sell forward?
Currently, we are not selling finished goods. We are only selling ingredients. So
Right.
we are not
So when
into
you
the B2C market yet.
Understood. So when you sell your ingredients forward, there is no specific approval needed in order to sell it to your consumer, which is the business
Mm,
that is manufacturing.
No, no. So FSSAI license is more than enough.
Understood. Okay, that is clear. So now we know that you are raising the primary use of the funds is to set up capex. You want to bring this manufacturing in-house. Just help our viewers understand what exactly this new capex will do. What kind of products will they produce? Are they different from what you are trading today, or a subset of those? What kind of capacity and revenue is possible once the capex is live?
Right.
That would be very helpful.
So our company is in a transformation phase where we are transforming from a trading business to a manufacturing business. So the capex is going to be used to make a manufacturing facility in JNPT SEZ. So JNPT SEZ is a dedicated area near the biggest port of India, wherein the any goods which are imported there are they come duty free and without any GST. So that's a huge advantage what we get by manufacturing the products there. By building this facility, we will be targeting export clientele. We are not focusing on domestic market, and we are making this facility to make the finished formulations, white labeling, third party manufacturing, CDMO services for foreign customers. So that's where our focus is going to be for the next 4 to 5 years.
Understood. And what kind of capacity will your this new manufacturing plant have? What is the peak revenue possible from this plant?
So the peak revenue in FY 29, we are expecting around 500 crore from this new manufacturing facility. This would be the top line. This is phase one. And in the background, we'll be also having phase two development while the facility settles down. Then we'll be looking for expansion in FY 28.
Understood. Given you said that this is largely going to be export oriented and today export is small, what is
Right.
the relationships you might already have with your future clients, right? To give people comfort that you
Right.
can scale export from effectively 0 to 500 crore.
So we will have two types of customers for export market. Currently, most of the Indian brands, they're looking to expand and enter into foreign markets like Dubai, Singapore, Australia, US. So we will be manufacturing the export products for these local brands. So they will have lots of cost saving compared to the products manufactured in India. So many of the ingredients which are being imported and used in these products, they have to pay local duties in the range of 10 to 25%. So that full amount will be a cost saving for these brands. So we are, and as of now, there is no such facility in India which is offering such manufacturing in SEZ for the nutraceutical space. So we will be
Hmm,
one of the first ones to enter for export market for nutraceuticals.
understood. And when will this capex go live?
So we have already purchased the land. We have got all the permissions in place. While we are talking, already excavation process is going on. And as soon as the funds come in from the IPO, we'll be infusing it, and the facility will be live in 11 to 12 months.
Okay, got it. And for this export customer also, there is no specific approval, client side approval, or any other regulatory approval needed if you're
Uh,
exporting these
so
ingredients outside.
So while we talk, we'll be making finished products in these facility. So the
Right.
permissions which are needed for the export customers, they will already have it in place. They just have to approve our manufacturing facility in their local FDA department. And we will be making our facility GMP standards, which is like a pharma standard, even higher than the nutraceutical standard. So we will not face any challenges in that terms.
Understood. Manish, you want to take the next part?
Sure, sure. Thank you, Rohit. Ankit, just wanted to understand from you, while you did mention that the EBITDA margins are slightly on the higher side because it's not a pure play, plug and play trading sort of a business. But just want to understand from you that the EBITDA margin has been on an increasing trend as well for the over the last 3 years. What is the main component for that? And second, why would your customer not want to backward integrate and do the uh, mixing of ingredients, for the lack of a better word in naive language, by themselves? What is the mode that you seem to enjoy because of which you can command higher margins?
Yeah. So we have a complete solution for the customer. Most of our customers, they prefer going and developing their marketing side of the business. They don't even want to manufacture the products themselves. So they tie up with a third party manufacturer. They do a tie up with us for the ingredients, and they focus mainly on the marketing side, and we provide them with most of the ingredients which are needed. So we are like a one-stop solution. Plus, we give them a freedom of credit period, so it gives them a relief in their working cycle, the cash flow as well. So these are some of the advantages of buying the ingredients from us.
Got it. But like in terms of the process, do you think if someone wants to go ahead and replicate that backwardly integrated, it is
It
rather
is, it is possible. I would not say it's impossible. It is possible, but we've seen that 90% of our customers are repeat, and they do not want to leave us. That's what we've observed in the past. And most of our customers are with us since 5 to 6 years.
got
The
it.
top 15 customers.
Got it. And can you just explain why the EBITDA margin has been on an increasing trend over the last 3 years?
Right. So every year we add 5 to 10 new products, which we see as a potential like a 10x products in next 2 to 3 years. So when we launch these new products, our margins are very high on that, and that is why year on year we are adding new products in our portfolio. That is why our profits are increasing.
Got it. Understood. And in terms of like the sustainable margin, where do you think you will be able to sustain your EBITDA margin towards over the long term?
Yeah, so we have a mix of product portfolio, like some of the commodity products which are going in huge volumes, those are giving us margins of 8 to 10%. So some products which are new and niche, they are giving us 15 to 20%, and some like very small quantity products are giving 50 to 60%. So because of this product mix portfolio, we are able to maintain our EBITDA at 16%. And going forward, also, we are looking that the trading business will generate such profits. And from the manufacturing side, once it is ready, our margins will be much higher there.
Got it. Understood. So, and then one more question. I was looking at your trade receivables. They seem to be on a rather high where you have a trade receivable of close to 75 days. You said that you give 60 days of working capital as such, but the business doesn't seem to, although it has great income statement, it is not able to convert everything into cash flows. How do you plan to change that, or is it something which is par for the course and the business needs to be operated in such a way?
So our business industry, it works in these these standards. Generally, credit terms are 30 to 60 days for most customers, and some customers is 90 days. So we have an average cycle of 75 days. And going forward, we are working on it to reduce the payment cycle. And you said that we are not able to convert that into operating cash or free cash flow. That's because if you'll notice our trade payables amount from year on year, it is getting better and better. So we are increasing, like we are paying our vendors on time. We are converting that into higher margins. So by paying our vendors in advance, we are able to earn much more margins compared to previous years. So that's one of the reasons why our margins have increased year on year, because we are getting more cash flow, but we are paying our vendors in advance to get cash discounts.
Got it. So it seems like a very cash intensive business as such. And I was looking
Yes.
at your fundraise. You don't seem to be raising any money for working capital currently. So how do you plan to uh, sustain the next set of growth and infuse the working capital? Will it be through
So
internal accruals?
yeah, through internal accruals. Like last year, we generated 24 crore profit. This year, we are expecting 30 crore profit. So that will keep on coming into the business. So we will not need more working capital from the IPO. Most of the IPO proceeds are going towards the building of the manufacturing facility. In fact, we are paying off 20 crore of our existing debt, and our company will be debt free. Yeah.
Going forward, so Ankit, just want to understand from you, what is the main risk or challenge that you think in this business? What are the risks which potential investors should essentially know before investing in it right now?
So business is very stable. The nutraceutical space is growing in India year on year, 16%. The right now the nutraceutical industry is $30 billion, and in next 6 years it is expected to double. So industry growth is very stable. The only challenge which I'm seeing is from the regulation side. Unless some new regulation is introduced by FSSAI and things become stricter or some products are banned, so that is one challenge which I'm seeing can come, which is unforeseen. So business wise, we don't see any challenge, and the Indian market is growing right now. In the I just had a case study that only 0.6% of Indians are active people, like going to the gym. So that's a very small number. Even if this number just doubles to 1.2%, then the whole industry is going to see a leap forward. So I'm very bullish about this space, and this is going to be the next pharmaceuticals of India market.
Got it. With that, we can probably ask you one more question before we wrap up. But Rohit, do you have anything before I conclude?
Ankit, like just if I look at the vision, and I know Manish will ask this, but I just want to try and draw a parallel. Since you've brought up pharma, can we say that what you want to do once you become a manufacturer is to be that sort of CDMO for the Nutra space? Is that a good sort of parallel and way to look at
Yes.
what Chemkart wants to be?
Yes, we want to be a one-stop solution for Nutra, wherein any customer who is looking to get ingredients or get their products made, they would come to us. We are also working actively to get scientists and R&D people on board to develop new products, new ingredients, get patents. So going forward, we'll be focusing more on R&D rather than just being a trading company. So in next 3 years, you will see a complete transformation of Chemkart, and we will no longer be known as a trading company.
Fantastic.
That is what my question was going to be, which it has already covered. But yeah, we majorly, Ankit, will still ask you and like any messages that you would want to give to potential investors who are joining right now, and probably over the next course of 3 to 5 years, what can they expect from you?
Right. So I would just like to tell all the investors that I started my business journey from a small room of 30 square feet. We had 3 employees back then and me, 4 people. All those 3 employees are still with us, and right now we are a 50 people company. We treat our employees as family, and they grow with us, we grow with them, and we would like the future investors who are coming with us to join our family and grow with us and enjoy the journey. So that is the only message for all the investors.
Perfect. Thank you so much, Ankit, for taking out the time today. I just want to repeat some of the timelines. Chemkart India IPO is a 80 CR IPO, which is opening on the 7th and will close on July 9th. So definitely do your due diligence, read about the company, and if you feel that you are interested in the company, go ahead and apply by 9th of July. This will come under new rules of SME. So that's one thing which we just want to highlight for everyone. With that, thank you, Ankit, for talking to us today.
Thank you, Manish. Thank you, Rohit.
Thanks a lot, Ankit. All the best.